All right, guys. Good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. If you're not seeing my face, it's for a reason. I'm still fighting a cold right now, as you could tell within my voice, just coughing and sneezing, runny nose. Nothing really crazy, but again, just loading up on meds. Advil, cold and sinus, nose sprays. The show must go on. So you didn't join this channel to see my face every day. I'll be honest, I look like shit. So what matters is what is the information, not my face. But once I'm better, you can see my ugly mug and feel better about yourself. So hope everyone's having a great morning. My apologies, my throat isn't the best, so I'll try to speak as slow as possible. Um, when you do this for so long, trading, your mind runs a million miles a minute, where sometimes your mind is faster than your mouth. That's me pretty much every day. So I'm going to try to speak a little slower to have my throat not kill myself, that sort of thing. But the show must go on as always. Good morning, everybody. I appreciate you guys joining me. For me not to do the morning note, I better be on a stretcher because you guys need to know this information and I want to share it with you guys every morning. So good morning, everybody. Let's go ahead and get started on the day. Appreciate you guys. Thanks. Of course, you guys are worth it. So I'm going to go ahead and say this video and then more than likely just work from bed. I have my laptop ready in bed. I'm just going to go and relax and make sure I have some soup later, which I had last night. The basic Latin things, when you're sick, you soup and Sprite. That's all. And it usually works. So I'm a child of the 80s, man. That's what we used to get. So let's go ahead and get started, guys. Dow futures up down 106 points. Nasdaq is flat this morning. S&P 500 futures down 0.17%. Russell 2000 futures down 0.30%. I still have those IWM puts. I'm going to go ahead and chart those with you guys today. Here in a second. It's a lot of chart work today, so that's what we're really going to focus on. Crude oil is up 1.5% this morning, 75.21. Gasoline futures are up 1.88%, $2.41. 10-year Treasury yields continue to go higher, even though we have a gap to fill at 35.43, which is 3.54%. It is right now priced at 3.659%. The dollar index is still below the resistance at 103.78, but it is higher this morning, 0.16%. The volatility index, the VIX, is up 1.65% at 1975. Let's keep moving here. Copper futures down 0.40% at $4.01. Euro dollar 106.94. That's down 29 pips. Remember the correlation between the euro dollar and the S&P. Always keep that in mind. If the S&P is higher, usually means the euro is higher, and if the euro is higher, usually means the S&P is higher because it's all about the dollar. Dollar yen is down 67 pips, 131.95. Usually when the Japanese yen is stronger, that's when yields come down. We talked about that correlation. So again, not today. It's not happening today. But again, correlations matter. 119.79, down 40 pips for the pound dollar. Bitcoin futures, even with the dollar being higher, pretty muted. 23,055 on the future side. 1645 for Ethereum, down 0.63% this morning. Okay, let's go ahead and get to the charts here. We're going to start with S&P 500, and then we're going to work our way into yields and the dollar and everything else. All right, so we know the drill with the S&P 500, the most famous trend line in the world. We know that now would be right at the bottom range of around 39.83. The longer the time goes, the lower that trend line will get. So again, we do have also this rising trend line here. So far it's been holding, and if it doesn't hold, we still have that 20-day moving average. Again, the 20-day moving average is a momentum moving average for us. If you look at the 1-hour candle 20-day charts, that's the 20 days, right? And here is your 20-day moving average. So again, that is a very, very good moving average to see in terms of momentum. I don't want to oversimplify it too much, but usually the case is that if you're over the 20-day, momentum is to the upside. And if you're below the 20-day, momentum is to the downside. So let's just go ahead and say, at least for this point moving forward, the next support other than this trend line is right around 40.45. And then we have the trend line here at 39.90. If you're looking for the next support, if we go ahead and break down below that trend line of around 39.88, you got the support here around 39.46, and that should be enough because that lines up perfectly with the 200-day moving average. Let's go ahead and take a look at the dollar this morning. Now, the reason I'm talking about the charts this morning is because really the only thing that stands out today in terms of economic data is Jerome Powell speaking this afternoon at 12. So we know last week when the Fed did not speak, when we had that blackout period, markets moved higher. We already have Neil Kashkari talking about that. Let me go ahead. The central bank has not made enough progress, and it's kind of been the same thing over and over. They keep talking, yet financial conditions are getting easier. So I think a lot of it has to do with the Fed trying to talk down this market, trying to talk down loosening financial conditions, and so on and so forth. But yet the price is changing to the upside. We've broken a lot of resistant levels. But again, we know we're not going to go straight up higher. We know we're not going to go to 5,000. We know what seasonality. We talked about that yesterday. That we have about two falls coming in February before we have a March rise. If you base analogs on seasonality, since everyone likes to talk about seasonality of 2008, 2002, 2000, 1987, well, I'll use the seasonality analog too. Let's take a look at the dollar here. We're tagged right at the 50-day moving average. Keep in mind, the 50-day moving average is still below the 200-day. That's still a death cross. So we still have a lot more to go before the dollar gets really bullish and we start seeing a little more of a flush on the S&P 500 if we're looking as the dollar being our main guide to the equities market moving forward. But again, you could see right on that 50-day MA, I expect us to reject there. Let's see what Powell has to say. He speaks around 12:45 this morning, or this afternoon, excuse me. 12:40. He's going to speak at the. Oh, it was rescheduled. It was supposed to be at noon. Due to participate in a moderated discussion at the Economic Club of Washington, D.C., we will see what exactly he says and how it will affect the markets moving forward. And then we also have other Fed speakers. So again, that's going to go ahead and add the volatility pretty much lined up with short-term resistance levels being here, the support here right around 101.64, which we finally broke. We talked about how supports can be like a mattress, not exactly a board. It can sink a little bit and still bounce. So from now on, we do have 100.80 as our support. Yeah, we jumped about $3 on the dollar index right at the 50. I have an alert at 103.85. Let's see if we break it, and if we do, you have another resistance here around 104.99. Let's go and take a look at the 10-year Treasury yields. 10-year Treasury yields are bouncing as well. We do also have a gap to fill here right around 35.56. The 10-year Treasury yields are very important because that's going to be pegged into housing. When 10-year Treasury yields rise, mortgage rates rise. We want mortgage rates to fall down and the dollar to go down to have everyone get back to a soft landing and see if we get more refinances, mortgage applications. Real estate's really going to be the help to get out of this 2022 bear market Federal Reserve tightening environment. We also have another gap to fill at 38.32. So we're in between a couple of gaps. We're right below the 100-day moving average, right above the 50-day moving average. We bounce exactly off the 200-day moving average. There's no crosses here. There's no death cross yet on the yields. You could see the 50-day and the 200-day starting to get a little closer on the daily. But other than that, really just chop here. Not much going on. As long as we don't break above 37.32, we'll see that we stay within this range. That's your 100-day moving average. Let's go ahead and take a look at the volatility index. You can see the VIX is still below 20, still below major moving averages like the 50-day, but it is now above the 20-day. What did we just say about the 20-day? That if you're above the 20-day, definitely more than likely momentum is on the upside. But yet the S&P 20-day, we're above that too. So let's see if the volatility index gives us a little more of a push to break that 20 level and to get to 2082. And if we take a look at SPY, you can see we still have that gap to fill at 421.99. We're right at that trend line, just like S&P 500 futures. But again, nothing below any major moving averages. Again, it's just a waiting game, consolidation period. Yesterday, the market really didn't move as much as people thought or people expected. So it's not exactly a thing of, oh, we're just going to tank immediately. A lot of this is just consolidation. If you remember on Friday or Thursday, I think it was Friday the 3rd, we talked about this trend line on Twitter, this resistance here of right around 13,000, or excuse me, 12,884. we sliced it slightly. We had the same thing back in September. We sliced it slightly, and then we came back down. Granted, we were not above the 200-day back in September, so again, that's a little bit of a difference there. The 20-day moving average is looking to break above the 200 MA, which is a pretty good sign on NASDAQ futures. We also have the 50-day climbing a little higher. If we could stay around this level, 12,005 to around 13,000, those moving averages are going to go higher, especially the shorter term moving averages. And if we get the 50 breaking above the 200, you guessed it, we'll have a golden cross. Back to IWM here. Let's go ahead at IWM, and again on the daily, we're trading at 193.43 currently. I'm 193.98 as support. We broke below it this morning. Doesn't mean we can't bounce back, but again, really that's your level to look for. Premiums did get run down yesterday, so we just need to see what Powell says. How many people bought puts last week looking for a sharp fall in the market? And everyone tries to buy puts ahead of Powell. I know I did. I bought insurance puts last FOMC, and what happened? We soared higher. So in a weird way, the market is kind of like saying, when the Fed speaks, we'll fall. When the Fed don't speak, we're going to go higher. And that seems to be the case, except for Powell lately, where we went higher. But down 0.11% on NASDAQ futures and down about a quarter point on the S&P isn't exactly panic time. And if this is the best the bears have at this very juncture, even at, let's say, overbought RSIs, which we're not anymore, I'm not very impressed if this is the sell that the bears want to do. It seems to be pretty consistent uptrend on the S&P, which is a very good sign. You can see that we did break below that trend line back on, I believe, the 2nd of February. And as long as we're still above that trend line, I think we should be okay. We still have some gaps to fill here on 10-year Treasury yields. A lot of it is just positioning. You have a dollar that's about to break, an S&P that's about to break down. Which one is going to come first? What's the support level? And it's really just lines on a screen. Nothing like price to change perception. Nothing like price to change the views of the market. So the idea right now is to just kind of let things move the way they have to move. And again, I'm of the camp that as long as we have consistently higher levels with supports that are holding, that is a bull market to the upside. Just like in the inverse, where you have resistance that's being respected, you have a bear market. But here we are. We had one of the best returns in January for the NASDAQ. We tapped above a bull market. We came back down below. But I think the writing is on the wall here. Other than, let's say, if Powell starts speaking very hawkishly, which he didn't speak hawkishly at the last FOMC, which was last week, I don't expect anything different from Jerome Powell. So does that mean the dollar could reject here? Why not? You are at resistance. Could the S&P fall a little further? Absolutely. You're at support. So it's really pick your horse. And at that level, at that stage of the game, if you really don't know what's going to happen, this is not a place where you want to go ahead and add risk. You're really just watching and observing. You're really just seeing some consolidation moving forward. And that's all we can do right now moving forward. We also had NVIDIA calls from yesterday. It did bounce. It is up about $3 this morning. We do have the 220 calls for this week. If we get a break of 217.10, we'll go ahead and catch that. And we're going to go very, very slow. We're going to be very methodical unless we see some kind of opportunity where we start breaking key levels, either up or down. It's really just a stock picker's market, in my humble opinion. If you're just looking at futures right now, if you're just looking at the indices, it's not much there. You're starting to see the names, like the semiconductors, healthcare coming down, rotation out into tech. So again, it's more of a stock picker's market currently than it is more of a just buy the S&P and go long on it, from what I'm seeing. So NVIDIA, if it breaks 217.10, we should be able to catch those 220 calls. If IWM holds that support and gets us a little bit higher, maybe to the 198, 199 level, maybe we could salvage a little bit. If not, time is on our side. We do have 4 more days of the week, excuse me. We also have the State of the Union address with the president this evening. We'll keep an eye on futures as we go. Again, any kind of news, make sure to keep it locked on our Twitter page. It is free at GAR Capital, so all the news will be there. I appreciate your time as always, guys. I apologize for my voice and I apologize for my nasally tone currently, but I wish I had better information for you guys, but it's really just a point of just watching and observing. Keep an eye on the dollar, keep an eye on the 10-year yields, keep an eye on the S&P, and I think that's going to give us the hints of where the market goes forward. And again, guys, you're not going to go straight higher. You're not going to go retest October lows, at least not anytime soon, in my opinion. I don't think at all. But this is where we are. We just have to wait after a big move last week. A lot of it is just kind of taking a pause and not exactly a bearish sentiment currently that I see out there. The VIX is certainly not reflecting that. The dollar being higher, possibly an oversold bounce on the dollar. Keep an eye on your Forex charts, and we'll go from there. With these 20, 50, and 100-day moving average, are they closed and simple? They are simple moving averages. Yep, it's SMAs. Okay, guys, I'm going to go ahead and leave it there. And I'm going to go blow my nose. Have a great rest of your morning. I will catch you guys tomorrow for the morning note. And have a great rest of your day. See you guys later.